Welcome, friends and financial wizards. Picture the stock market, buzzing with activity, a whirlwind of numbers and figures. In the midst of this chaos, we find enterprise product partners, a stage of financial drama where the actors are companies and the script is written in numbers and figures. Here, the stock market is a theater of dreams and nightmares, a place where fortunes can be made or lost in the blink of an eye. Amidst this frenzied ballet of buying and selling, one player has been consistently hitting the high notes: Enterprise Product Partners. This is a company that has held its own in the face of commodity price weakness, setting operational records in natural gas, NGL, and crude oil volumes. A company whose financial strength is unparalleled in the midstream sector. It's a financial mammoth with a scale and integration that have allowed it to achieve high margins and returns. But what does this mean for you, the potential investor? It means that before you dive headfirst into the stock market pool, you need to understand the financial health of the company you're investing in. You need to examine their profits, revenue streams, business moat, dividends, and more. When it comes to enterprise product partners, the outlook for Permian production remains strong, which will benefit their downstream activities. They've recently increased their quarterly distribution by 5%, marking the 25th consecutive year of distribution growth. Their units trade at a discount to intrinsic value, and their low leverage profile positions them well for future consolidation. In the world of the stock market, knowledge is power. The more you understand about a company's financial health, the better equipped you are to make informed investment decisions. So buckle up as we delve deeper into the financial labyrinth of enterprise product partners. We'll explore key factors like profits, revenue streams, business moat, dividends, and more. We'll ask the big question: is now a good time to purchase shares in enterprise product partners? And we'll try to find the answer. Remember, the stock market is not a game of chance. It's a game of strategy, a game where the best player is the one who knows the most. So, get ready to learn, get ready to explore, get ready to dive into the fascinating world of the stock market. The curtain is about to rise on the next act. Stay tuned. Profits and revenues, two words that make or break a company. Let's dissect these for enterprise product partners. If we gaze at the recent performance of enterprise product partners, we find a compelling tale of resilience and growth. Despite commodity price weakness, the company reported strong second quarter results, setting 6 operational records as natural gas, NGL, and crude oil volumes increased. As we delve deeper, we find that the company's financial strength remains unmatched in the midstream sector. This resilience is a testament to their robust business model and strategic foresight. Now let's compare these figures with the company's past performance. Over the past 25 years, Enterprise Product Partners has consistently increased its quarterly distribution, reflecting a steady growth in its profitability. But how does it stack up against the industry? In the midstream and energy sector, Enterprise Product Partners is considered a top equity income pick. The company's scale and integration have allowed it to achieve high margins and returns, a testament to its strong performance in the face of industry challenges. Now let's talk about revenue. Enterprise Product Partners has demonstrated an impressive revenue stream owing to its strong downstream activities. The outlook for Permian production remains strong, which is expected to further boost the company's revenue in the coming years. When we compare this revenue stream with the industry average, we see that Enterprise Product Partners has been successful in carving out a significant market share for itself. Its units trade at a discount to intrinsic value, suggesting a potential upside for investors. Impressive numbers, aren't they? But there's more to a company than just profits and revenues. It's time to dive into the revenue streams and business moat of Enterprise Product Partners. Enterprise Product Partners, a titan in the midstream sector, has a diverse portfolio of revenue streams. These are primarily driven by its operations in natural gas, crude oil, and NGL volumes. Each of these sectors contributes significantly to the company's profitability, creating a solid foundation for its financial performance. The company's vast operational scale and integration have enabled it to achieve high margins and returns, further bolstering its profitability. Now, let's shift our focus to the concept of a business moat. In the business world, a moat refers to a company's ability to maintain competitive advantages over its competitors in order to protect its long-term profits and market share from competing firms. Just like a medieval castle, the wider the moat, the more durable the company's competitive advantage. Enterprise Product Partners has effectively created a business moat for itself in the energy sector. Its unmatched financial strength, combined with its operational efficiency and integration, has positioned it well above its competitors. The company's low leverage profile further strengthens its position, making it a formidable player in the industry. Moreover, Enterprise Product Partners' operational records in natural gas, NGL, and crude oil volumes have set a high bar for its competitors. This performance has not only solidified its position in the industry, but also contributed to its business moat. The company's outlook for Permian production remains strong, which will further benefit its downstream activities and strengthen its competitive edge. So, we see that Enterprise Product Partners has a diverse set of revenue streams and a strong business moat. These factors have not only contributed to its consistent profitability, but also positioned it well for future growth and consolidation. A strong business moat and diverse revenue streams, a winning combination. But what about dividends? Dividends, the sweet reward for investors. What's the story for Enterprise Product Partners? Let's dive right in. In the world of investing, dividends are the icing on the cake, the cherry on top, the proof in the pudding that a company is not only making money, but also sharing it with its shareholders. A company that consistently pays dividends is often seen as a reliable investment. And Enterprise Product Partners, well, they've got a track record that's hard to beat. For 25 consecutive years, Enterprise Product Partners has increased its quarterly distribution. Yes, you heard it right. For a quarter of a century, this company has not only given back to its investors, but it has increased the amount it gives back. It's like getting a raise every year for just being an investor. Recently, they've upped their game even more, increasing their quarterly distribution by 5%. In an economic climate where many companies are holding on to their pennies, Enterprise Product Partners is giving more back to its shareholders. What does this mean for you as an investor? It means a steady income stream, a cushion in volatile markets, and a company that values its shareholders. But let's not forget about the company's financial strength. It's unmatched in the midstream sector, setting 6 operational records as natural gas, NGL, and crude oil volumes increased. This kind of robust financial performance is what allows Enterprise Product Partners to keep the dividends flowing. To top it all off, Enterprise Product Partners units trade at a discount to intrinsic value, suggesting potential upside for investors. It's like getting a premium cake at a discount price. So, if you're looking for a sweet reward in your investment portfolio, Enterprise Product Partners might just be the cherry you've been looking for. They've got the dividends, the financial strength, and the potential growth that can make investing a rewarding experience. A consistent dividend payer, Enterprise Product Partners surely knows how to reward its investors. The moment of truth. Is it a good time to buy shares in Enterprise Product Partners? Let's take a quick journey back through the key points we've explored so far. Strong second quarter results, 6 operational records set despite commodity price weakness, and a steady increase in natural gas, NGL, and crude oil volumes. These are all indicators of a company that's not just surviving, but thriving in its industry. But let's not stop there. Enterprise Product Partners' financial strength is unmatched in the midstream sector, an accolade that shouldn't be taken lightly. It recently increased its quarterly distribution by 5%, marking the 25th consecutive year of distribution growth. That's a quarter of a century of consistent growth, a testament to the company's resilience and robust business model. The company's scale and integration have allowed it to achieve high margins and returns, which are music to any investor's ears. Its low leverage profile positions it well for future consolidation, indicating potential for increased market dominance in the future. In terms of valuation, Enterprise Product Partners units trade at a discount to intrinsic value. Both EV/EBITDA valuation and discounted cash flow scenarios suggest upside potential. This could mean that the shares are currently undervalued, providing a great entry point for potential investors. However, this is not a one-sided coin. The stock market is a volatile beast, and while the outlook for Permian production remains strong, external factors such as geopolitical issues, market volatility, and economic downturns could impact the company's performance. So, is it a good time to buy shares in Enterprise Product Partners? Based on our analysis, it appears that Enterprise Product Partners could be a worthy addition to your investment portfolio. But remember, the stock market is full of surprises. Always do your homework before investing.